Well, hello everybody. It is Market Monday time. It's Blair Nightingale here with Tradeway coming at you every Monday night. Market Monday got a whole new series of episodes coming up for you now till the end of the year. And I got to tell you, I am actually very excited about these episodes. We got a new series starting today. Is the market going to crash? It's a question I know is probably on the minds of a lot of people. Maybe a question we're asking ourselves in the back of our minds at the very least a lot of the time, okay, regardless of what the market may or may not be doing. But here at Tradeway, we've been in what we call a squirrel market now for just about 2 weeks, maybe just over 2 weeks, where there's been some erratic behavior in the markets, very volatile, closing below the 100-day moving average today. Pretty significant. Second time in 3 trading days that's happened. You say, Blair, I don't really know what that means. Close below the 100-day moving average. What are you saying? We're going to look at that and more today to tackle that very question. Is the market going to crash? Something you're going to want to know today is, what are my thoughts on that? And ultimately, how can you be prepared for that? That is what we want to do. We're missing some folks on Facebook today. I know probably some folks out there are trying to get on right now through Facebook. Major outages across Facebook, all their companies that they own. So no Facebook today. Everybody joining us on YouTube. Okay, as soon as we can get this up and running, perhaps some of you are hearing me right now on the recording, and we'll have that posted to YouTube as soon as possible. But if you're on and you know a friend out there who normally comes and joins us on Market Monday, they may be trying to watch on Facebook, not going to be able to do it today. As I said, major outages. And that's too bad, I got to say, because this is going to be a good episode that nobody wants to miss. I promise you that. Mark says, hey, Blair, I'm with you on YouTube. And you know what, Mark? YouTube is as good a place to watch this as any. You can go back and right there, that's our channel. You can go back and you can watch all the older episodes there. We could comment just the same. So no problem joining us right there on YouTube. And of course, if you are there, you can always click the subscribe button. It won't spam you. It's just going to let you know anytime we're going live so that you don't miss any of the stuff that we're doing through the week, okay? Because we're doing broadcasts for you every day. We're tackling this question today. Is the market going to crash? Aside from probably the most obvious reason, people would want to know, is it going to crash? Is this going to mean a recession? What about my long-term money? You may have savings, retirement, investments of any kind. Today on Market Monday, we're going to talk both long and short term, because if we're going to talk about markets crashing, taking downturns, deep dives, however you want to define that, it's going to affect short-term traders and long-term investors. And at Tradeway, we actually do both. Now, on Market Monday, we almost exclusively talk about short-term trading. This is going to be very beneficial for those who are short-term traders, and I'm going to talk about that more in a minute, but it's also going to be very beneficial for those who are long-term. And at some point, we would love to see everyone out there understand how to approach the market in both ways, okay? We're not anti-long-term buy and hold here at Tradeway. We do that, okay? We have a program where we do that. We just have the skill sets to help folks out there know that they don't need to ride an economic downturn or a bear market crash all the way to the bottom like most financial advisors do. But that doesn't mean we don't do a long-term buy and hold, okay? So just because I don't focus on that on Market Monday as a whole doesn't mean we don't do that. It just means that's not usually the focus. And it's really important that I make it very clear that when I'm talking about the disciplines of trading stocks, that we understand that versus a long-term buy and hold. Also, I'll just throw this in a little bit ahead of time, but if we can see if we can see big downturns in the market, back to our question, is the market going to crash? As a short-term trader, I could stand to have skill sets that have the ability, right? They can potentially profit off of those downturns. So not only are we looking at learning to protect my long-term money, but take some of that short-term money and actually have some opportunities to grow the account as that happens. So that is a double whammy, okay, on not only protecting but potentially growing your account in a bear market instead of just watching it get crushed like so many people do. I've shared this story before. 2020 bear market crash, COVID-19. I personally got phone calls from people as a coach here at Tradeway saying, Blair, the market crashed. My advisor left my money in all the way down. Now, somebody's quick to point out, Blair, it all came back. It recovered. Well, assuming all the stocks that individual was in came back, I'm glad. I'm glad it did. But I would also point out that was the first time in history we've ever seen a bear market recover that way, that quickly. And at the time those individuals called me, there was no guarantee that was going to happen. That's not really a position I want to be in. I imagine that's not a position you want to be in either. And here's the deal. We don't have to have a crystal ball and perfectly know how to time the market to protect our money. And that is exactly what I want us to talk about today. Now, I'll say one last thing before we dive in. Mark said, I am with you here on YouTube. Just remember, folks, you can always post a comment there, question, thoughts, concerns, anything pertaining to maybe your situation or question you might have for me as we go through, because I would love to be able to speak individually into your circumstance. It doesn't have to be anything financially sensitive. In fact, please, nobody put anything like that in the comments. I don't think you guys would, but it's worth saying. But if you do have a more specific question, I would be very happy to answer that on the broadcast. We're going to look at charts. I've got a couple other things I'm going to show you today. So let's get off and running here because we got a lot of ground to cover. So I mentioned the title, is the market going to crash? And I'm going to tell you, I'm not going to make you wait 30 minutes into the broadcast for me to make that answer, because I'm going to tell you straight ahead what I think that answer is. And this is the answer you need to hear. Okay. It may not be the answer you want to hear, but it is the answer you need to hear. Is the market going to crash? My answer is we don't know. And yes, it is. Now, let me break that down, okay? Because I understand that's the frustrating answer. Wait, 2. Why isn't it just 1? Can't you just say 1? No, I actually really can't. Because is it going to crash today, tomorrow, this year, next year, the year after that? That's the I don't know. I don't know that. And it's actually really important to say that because, number one, I actually don't know. That's not the job of a trader, is to know exactly when something's going to happen, because I actually can't know that. And a lot of opponents, people who say we can't actually do short-term trading, we can't time the market, we have to leave it in all the way to the bottom in a bear market because you can't time the market, they actually don't understand that it's not about knowing the future. It's about being prepared and knowing what to do, right? When we don't know what the market's going to do, we can know what we are going to do. That's the skill set. And that's what I want to help you with today. So I say, I don't know. I actually don't know when. But to move beyond that, I also said yes. Because if you're asking me if the market is ever going to crash again, my answer is yes. Now, is it 100% guaranteed? Absolutely? No, it's not. It's not. But it has always repeated itself in history. There's never been a time where the market didn't advance and then have, at least at some point, significant decline. Advance, decline. Advance, decline. This is what we talk about in the economy, the economic cycle. We expand and then we contract. We reset. We expand and we reset. Can we do some things that make the pain of reset lessened? Yes, we can. I hope to help you with some of that today. And I think if you pay attention, we're going to achieve just that. But avoiding it altogether, outright, completely, it's never happened before. So if we don't see a bear market again, well, just know we're banking on something completely unprecedented. And I think there are reasons, some of which I'm going to talk about today, to believe that we aren't out of that cycle. We are going to see expansion, contraction. We're going to see the same thing happen again. I'm not going to predict when a bear market is going to happen on today's Market Monday. That's actually not what I'm here to do. And that's actually not going to help you. Somebody out there might do that. Now, I'm going to show you something today that has actually precipitated two major downtrends, major moves down in the market. Okay. A Nobel Prize winning economist, okay, has essentially said there's a red flashing light before two major downturns. I'm going to talk about how he did that today. But even then, I'm not predicting when a bear market's going to happen. I am simply saying this is what the risk is. Here's some things to pay attention to, and here's how you can know exactly what to do when it happens. So you and I don't have to be concerned. We don't have to be afraid of it. In fact, we could even be excited. Whoa, wait a second. Skill sets could potentially mean I'm going to be excited for an economic downturn in terms of the stock market. Now, we at Tradeway, we don't want economic recession. That is not what we are for. That is not what we are about. We want to see people grow in their finances. We want to see people break out, break through, and step into abundance. That is what we want to see. But we know that in the economic cycle, again, there is that expansion and contraction. So even in the downturns, what are some of the things we can do to continue to advance? Okay, so that's what I want to show you. So I say, we don't know, but it's going to happen at some point. And we'll probably, I'm going to say, highly likely, we're just going to have to reckon with that. We're going to have to come to terms with that. So we might as well look at being prepared. Okay, we might as well be prepared because, like I said, even if we don't predict the market, we don't know what the market's going to do. What if I knew what I was going to do? What if I could say to myself, I could look at my investment account, I could look at my trading account, and I could say, you know what? No matter what the market does, I already know what I'm going to do. I know what I'm going to do if it goes up, and I know what I'm going to do if it goes down. So anxiety levels are coming down. Confidence levels are going up. That's a good thing. I like that. Okay. So we can't predict the market, but we can watch and see what it does. And it'll give us the information that we need in real time to make the decisions that we need to make. That's where the strength is. So remember, we're talking long and short-term investments. We want to protect our capital on both sides, long or short-term. We want to protect our capital, and on the short-term side, see how we could potentially stand to make some money if we see some big moves down. You know, bear markets, downturns, not even bear markets, market corrections, they tend to be pretty big and pretty fast moves, right? There's a lot of volatility. So there are certain approaches to the market that can actually provide some really unique opportunities for us. So that's a good thing to know how to do. Okay, so what we're watching for right now, okay? What time is it? That's what we really want to answer. What season are we in? We've talked about this for a few weeks now on Market Monday. What season? I'm not going to know exactly when the market's going to crash if it crashes. But I can start to notice some things. I'm out in California. I came to you guys a couple weeks ago from the East Coast, New York City. Well, I'm out on the West Coast this week. Okay, the seasons are changing in both places. Okay, not so much for East Texas, I got to say, not yet. But the seasons are changing. It's still pretty hot outside, but I can tell nighttime temperatures are getting down lower. I can start to see some of the trees, not all of them, some of them, leaves are turning brown. Right? There's certain things that are happening, even though we're not really there yet. It's not confirmed. You just know those are some things that tell me the season's changing. And I think there are some of those things in the market. So with that said, let's go through a list today. I want to show you four things today that are like what I just described. Season changing a little bit, okay? Season changing a little bit. And we ought to pay attention to that because these are the kinds of things that precipitate bigger moves down, okay? So let's go over here onto our chart. Yancy, I see you there from San Antonio. Thanks for joining again today. I've seen your name on here many times, so thanks for being with us tonight. Let me go ahead and share my screen with you guys. We're going to pull up a chart here so we can look at what we're talking about. Here we go. Alrighty. We got that right up in there. Looking at a little Bitcoin there. All right. Here's our market. Okay. We came up into here, down, tried to bounce, failed, came up, tried to recover back into the range that we've been in for some time. What did we do? Failed, tried to get above the 100-day, failed. Okay, so we're making a move down, making a new low today. So we've definitely got some volatility. We've definitely got some weakness. So I said 4 things. Here's number 1. Okay, pay attention as we go through these 4 things, because these are the 4 things that I want to show you today that I believe are going to be very helpful for you. Okay, the first one is this, and you know what? I've learned something this year in particular, especially when it comes to money, trading, but money in general. There's almost a perception. Maybe you guys didn't have this. I did. Some of you can relate to what I'm saying. Where the more complex, maybe the more taxing, maybe the more long something took or complicated it was, then that meant it must have more value. Actually, I don't know. I think I picked that up, growing up in a blue collar town. I've told some of you guys on Market Monday my background before. Just a regular guy, didn't know anything about economics and trading, came into Tradeway and learned everything that I know about this from them. So anybody can do this, okay? Anybody can do this. Now, we have some amazing people here who can take some of you advanced people to the next level, but I'm telling you, a lot of beginners come into Tradeway, and I am a testimony that, you can learn a lot from any point. So let me just say that. But I think along the way, out of that blue collar mentality, it's like, it's valuable if it's hard. It's valuable if it takes a long time. It's valuable if it's blood, sweat, and tears. It's valuable if it's complex or it's complicated. But you know what I'm learning from really wealthy people, people with an abundance mindset? That's not actually always true. In fact, maybe in some cases, it's not even often true. I wouldn't say it's never true, but it doesn't have to be the case. So here's my first one for you guys. Is the market going to crash? Well, let me ask you this. What's the pattern? Real simple. Really simple. What's the pattern? What's the pattern in the S&P? If the S&P is in an uptrend, doesn't mean it can't crash. I mean, hey, let's go back to here for a second. Let's go to March of last year, where we actually had a real bear market. Look at this beautiful uptrend. Okay, I'm going to turn my brightness up here so I can see a little better myself. Beautiful uptrend. And then what? We broke the pattern. So right here, let me highlight this for you guys. Right here. Uh-oh. Red light, flashing light, warning. Did we know a bear market was going to come right away? No. But you know what we did? We declared a squirrel market. Why? Because the S&P broke its pattern. It's no longer in the pattern. Oh, warning, warning. Broke the pattern, closed below the 100-day. Broke the pattern, closed below the 100-day. Once we teach you the patterns, most of you guys out there know this already. Some of you don't. That's totally fine, right? Once you know the pattern, it's a binary choice. It's a yes, it's a no. Is it in the pattern or did it break the pattern? Oh, it broke the pattern. Whoa, warning. Doesn't mean I need to be afraid, but it puts me in a defensive position. Oh, I need to switch gears. I'm protecting capital now. Until the market is consistent, predictable, reliable, repeatable, we like to say, where the pattern is working like clockwork. Let's go back to here. What have we had? Look at this. Look at this trading in here, right in this range. Then up here, it just keeps going, right? The market had returned 20% just this year. It's down about 5.5% right now from the highs of this year. Okay? Very consistent. It breaks the pattern, but doesn't close below the 100-day. Moves up, and now we're below that 100-day. So you say, well, Blair, are you saying it's going to be like March 2020 last year? Nope, not saying that. But again, we don't have to know what it's going to do. We can be conservative, or we can shift gears. Okay. We can shift gears and go, it's not in a pattern anymore. There's at least a yellow light. You may not have a red light, but at this point, we should, at least in our opinion here at Tradeway, we should have a yellow light over our invested money. Okay. I'm not suggesting that everybody out there needs to go and get out of everything in the market. Now, our amped long-term program, they are not in the market right now. Now, remember, they have the skill sets to be knowing when do I get in and when do I get out, not just for short-term, but also for long-term money. We want to help you protect your long-term money. It's a very unique thing about how Tradeway does long-term investing, okay? Helping Tradeway students protect their long-term money as well. So I will say they are not in the market right now. I've heard that right from Ben Russell, the director of that program, just earlier today. That said, at least a yellow light, because why? Because we're below the 100-day moving average. And we're not in a pattern. That's number one. You can watch that. You say, Blair, are we in a bear market? Are we in an uptrend? Have we moved more than 20% from the highs? A couple weeks ago, not even close. Not even close. But we start to see the yellow lights before we see the red lights. Okay? So that is a huge thing. Can I see strong support on the S&P? Okay, this is still number one. This is just one thing, right? I got three more for you. Does it have strong support, right? If there's no pattern, we're not going to know where support is. So once it breaks, ooh, yellow light. Okay, let's move on to the next one. I want to keep checking here, just make sure we don't have questions as I'm going through. Okay, good. So, by the way, while we're on the chart, let me just give you a little tidbit here. Every time this makes a move down, you know what I'm watching for? I'm watching to see if it breaks the previous low. So you see this wick here? There was a low that it made. It didn't stay there, but it made it to that. So this day when it came down, I watched for it to break that low. It didn't. The next day it did before recovering, and today it actually broke it. So it's back and forth, you guys. It's crazy now. It's out of the pattern. It's transitioning. There's change. It's less predictable. You know, when you're in the middle of winter, it's not so unpredictable, is it? Right? Depending on where you live, right? Some places are a little less predictable weather-wise. But for the most part, if you're in the dead of winter, it's pretty predictable. You get pretty much the same thing most of the time. But once you get to the edges, of winter, and it starts to flirt with spring, right? Some days are more wintry, but then you got some spring days, but then it's back to winter. It's like in the Midwest, you know, they say, well, what's the weather? I don't know. Wait 15 minutes, right? Like it can change anytime. But as you get further into spring, it's more concrete. And that's the same thing in these seasons. And right now we have a squirrel market called at Tradeway because it is in a transitional time. So I'm always watching the lows. Guess what line I'm watching tomorrow? Same thing, the low. You can see my crosshair, that dotted line is right on that low right now. I want to see if it can go lower than that. If it's going to go up, where do I want it to go? I'm going to look for this line here. 20-day, 50-day moving average, and this downtrending line, which now has two tops, not just this one, two. Don't anticipate, unless we do see a much bigger downturn, that the S&P is going to stay in a downtrend. But if it really does form a downtrend, well, we could be in for a much bigger move down. So number one, what's the pattern? All right, I've said that a few times now. Second thing, what are some of the underlying concerns here? Can we get a little bit of a deeper insight? Okay, now I want to teach you guys something a little bit today. We're not going to go really deep dive into fundamental economics here, but I do want to make one thing apparent to you, okay? I mentioned there is a Nobel Prize winning economist, okay? And he came up with something, this individual, Robert Shiller, came up with something called the Shiller PE ratio. I know some of you guys are already falling asleep on me. This stuff is not really all that interesting when you start saying it like that. But hold on with me for a second, because what this looks like is pretty interesting. Now, let me go ahead and stop my screen share because I am going to add in another screen so you guys can follow me as I go through this. We got a train coming by, so hopefully you guys can hear me. Here is this ratio. Now, what does this mean, ratio? Well, a ratio is really just comparing two numbers, right? And this particular ratio says what are the earnings, okay, of companies across the stock market, keeping this very simple, versus how much their shares cost. And it's measured in 10-year periods at a time. So it's not just a 1 day or 1 month or 1 quarter thing. It's very broad, right? It's very broad. So over 10 years. So let me say this again. It's measuring how much are companies making versus what are their shares being sold for. And you can imagine with me for a second that if companies are making this much and their shares are being sold for this much, ever increasing distances, here's how much the company's making. Here's how much the shares are selling for. And a year later, it's like this. And a year later, it's like this. And another year later, it's like this. And it gets bigger and bigger and bigger, or smaller. That's what this chart in front of you is measuring. Now you say, Blair, why is that important? Well, I think it's very interesting because the levels we're at right now, the distance between those two numbers in the ratio has only been as high as it is right now just only a couple other times in history. By the way, one of them was 1929, the crash of 1929. Also in the late 90s, before the dot-com bubble, okay, also was very high before the 2008 crash. And you'll notice on the right-hand side of the chart, here you go. Here's the dot-com bubble right here, guys. And here's where it dropped extremely quick. And then you see here it peaked before it went down in 2008. What have we done? As of September 21st, now this is actually of October 4th, but as of September 21st this year, we crossed a line, okay? And we've only been this high 3 times. It's extremely high right now. Now, let me just say this. I'm not saying this predicts a bear market tomorrow, next month. And this is not about fear. Some would criticize this ratio. So I'm not even saying this to you that this is the be-all, end-all Bible of what's going to happen tomorrow, okay? But why am I saying it? Because it is a very important indication. It's saying that we have, because of speculation and the flow of money, we've driven the prices of stocks up, 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 up. Let's go back to the markets, and I'll show you something. These prices have gone up, 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 really since 2016, you guys. Now, we did have last year, but you know what? I told you guys on Market Monday last week, we have blown last year out of the water already. The drop here, we are so far above that. Okay, here's 2016. Down here at 1831. We're at 4,500 just a couple of weeks ago. Okay, so the market has been advancing, like I'm being dramatic for a reason. So it's not hard to say that prices are very extended. Prices are very extended. Now, I would say something else. Remember what I said? You know, you might notice the grass changing, the leaves changing. Man, maybe it's not that much cooler in the day yet, not here in Northern California, but it's getting cooler at night, right? There's some things that are starting to line up. I've told you guys about the Fed. The Fed is changing their policy, right? Interest rates are changing. Buybacks are changing. That's actually a fundamental difference. So there are actually some things shifting. We've been seeing the last 2 days. Now I'm taking you guys a little bit deeper today, all right? But we've seen pretty deep sell-off in tech stocks. Tech stocks are that's been the real driver in this bull market, guys. They've been just voraciously buying these tech stocks and driving them higher and higher. But guess what? They're the first ones they dump when they want to be more conservative. They being the big boys, the big money in the stock market. When they want to be more conservative, they're ditching those highly speculative tech stocks. And guess what? The S&P 500 weighs a lot of those tech stocks in their index heavier than others. So it deeply affects the index. Okay, so there are some unique things happening right now that say what? Season's changing. Season's changing. The first one is, what's the pattern? The second one is, if there's a couple things I could learn how to watch just to see when the season is changing. Okay, and when I see 1, 2, 3, 4 of the things I'm showing you today happening at the same time, then I know, okay, again, at least I have the knowledge now to have a yellow light. I don't have to be completely caught by surprise, okay? So what are some of those underlying concerns? For those of you that are interested in hearing that again, that is what we call the Shiller ratio. It's also known as the CAPE, C-A-P-E ratio, okay? I know a lot of you may not look into that. Some of you might want to. But again, it's showing what are these companies actually making versus what are stocks trading at, okay? Again, it's not gospel in that it's the only approach. There are some criticisms for it. I think it's very interesting to look at nonetheless. Some would argue, well, Blair, yeah, companies are making this, but stocks are up here. But you know what? We can justify that. We can justify that because interest rates have been very, very low. So we expect a lot of economic growth, so we're able to speculate. But again, I told you, interest rates are changing. Some of the fundamentals are changing, you guys. The grass might turn a little browner. The leaves might change. The night might get a little colder. And as we start to see that happen, hey, let's just keep a jacket by the door, okay? You didn't need that 2 weeks ago, but maybe you do now. And that's the point I'm trying to make today. So that's number 2. We're going to keep on running here. We're 33 minutes in. Number 3, remember, on the other side of this, the majority of the time, the market does want to go up, right? I mentioned we're about a 5.5% move down now from the highs as of the close today. And when you think about how hot the market's been, 5%, that's not that bad, right? Stocks reset. Not every reset is a crash. We don't need to be afraid of a crash every time stocks reset. Our long-term program here at Tradeway, we're not getting out of everything in the market every time the stock market moves back. But again, if we see the seasons changing, the pattern is broken, closing below the 100, the 200. If we get below the 200, now that's a whole different ballgame, right? You guys can't see the 200 on the chart. It's way down here. In fact, let me just show you what it is. I'm gonna switch it for you, just so we can see the 200. Okay, that would be down here. Okay, approximately 41.40 as of today. 41.40. Okay, so that'd be a significant drop yet. But you know, if you're getting down to the 200 and below, then you're starting to look a lot more, I would use the term sloppy. And what I mean by that is the market is not stable, not for bullish investing, okay? So sitting at that 100 right now, but the majority of the time the market does want to go up. So a pullback like this does not spell the death of a bull market, right? It ain't over till it's over, okay? So we want to keep ready for a snapback, for a rally. This market can still rally strongly from here. And the deeper the sell-off, we may see that, but we don't want to get ahead of it. Let the market show you a rally, show you a return to a good pattern before we go and gamble, guess, or go for it, which I say on here all the time is not trading, because you just have to know how much risk you're taking when you speculate, because we could see another leg down here, okay? So I want you to understand the skill sets that help us stay safe. I can't get into all of that right now, but let the market show us a recovery, show us a good pattern, so we have some reliable and consistent trend to be trading with. 5% move down, though, not a calamity. Maybe unnerving, but it's not a bear market yet. So remember, the majority of the time, it does want to go up, okay? So not to jump the gun too quickly. I said 4 things. Here's number 4. I've mentioned, I think 3 times now, it's not so much about knowing what the market is going to do as it is about us knowing. A lot of things in markets seem to be based on predictions. It's like Wall Street news, media, and a lot of education out there, let's be real for a minute, wants to speak to you and me as retail investors like the idea here is to figure out how to predict. We don't need to figure out how to predict. We need to have a good process to know how to take advantage of good opportunities in the market and learn how to spot those. What do I mean? Let me say that in different terms. Again, it's about me being ready. So I want you to ask yourself a couple of questions to make this practical, okay? If it's not about knowing what the market's going to do, but what I'm going to do, how do I know what to do? How do I know what I'm going to do? Well, let me ask you these questions here, okay? So you can pay attention to these because these are going to help you know what to do. Ask yourself this: what is my plan if the market does crash? Forget about predicting it for now. What's my plan? Now, what I'm getting at is that a lot of times, a lot of us, well, we don't have a plan. We don't have a plan. In fact, maybe we're paying somebody else and we hope, maybe we're not sure, but we hope they have a plan, right? Does your financial advisor have a plan? So the next question, if you have long-term money in the market, do you have a financial advisor? And if so, do they know what they're going to do? What is their answer? If you've never asked that question, and I'm not saying demonize or be nasty or anything like that, but that's a very good question to ask. Anybody who's going to take care of your money, what is your plan in a bear market? What is your plan in an economic downturn? That's as a long-term investor, okay? If you self-manage your money, what is your plan when the S&P 500 breaks pattern, breaks the 100-day moving average, breaks the 200-day moving average? Okay? You said, Blair, I actually don't know. Here at Tradeway, we want to teach you, right? We want to teach you what you can do in those specific instances. Let's ask some more questions though, okay? Short-term trading, that's long-term. Let's talk short-term for a second, okay? What are you going to do when the pattern changes? Now, it's this very similar, but for short-term traders, sometimes we're used to making trades when it's in a certain season and in a certain pattern. And the pattern changes and the season starts to change and we try to force a square peg into a round hole. Why? Because maybe it's been working for us in the past. So we're going to keep trying it and we're frustrated because it's not working. Because the market changes. Here at Tradeway, this is why we teach you multiple different short-term trading tools, not just one thing. We don't just teach you how to buy stock, okay? We're going to teach you how to buy stock. We're going to teach you how to do covered calls, right? We're going to teach you how to do debit spreads, credit spreads. We're going to teach you options. It can make money when the stock goes up, but it can also make money when the stock goes down with a put option. Multiple tools, not just for extra sake, but so you have different clothing for different seasons, different tools for different jobs, okay? And there are coaches here at Tradeway that want to work with you to help you be able to answer all of these questions. As a short-term trader, right, what am I going to do when the season changes? Because it's not a great time to buy stocks right now. Now, your plan could be, if there's no uptrending pattern in the S&P 500, I'm not trading stocks. That could be a pattern, or that could be a plan, right? That could be your answer. It needs to be reliable, predictable, repeatable, uptrending pattern for me to be out there and buying stocks. I need to see that in the S&P. I need to see that in an individual stock, assuming short-term trading, right? And then ultimately going, okay, maybe I realize I do need some other skill sets. Maybe I do need some other tools. Okay, what could that look like for you? Okay, maybe it's time to get into one of those memberships. Maybe it's time to up your membership, right? You can learn more strategies as you go further in the program. Okay, we have inexpensive monthly memberships for people. You can come in, you can learn, you can cancel anytime. Okay. Today, specifically, I'm going to drop this in there because I think in terms of this subject material, this is the most important thing probably to have. For those of you who've never even seen the AMPed program, okay, the AMPed program is Ben Russell and his team here at Tradeway. They are going to help you build a long-term portfolio. Long-term portfolio. and he is going to help you know exactly when you should be in and when you shouldn't be in with your long-term money based on your age, your risk assessment, your goals, all kinds of personal stuff. Ben's going to work with you to get a plan that fits for you, and then he's going to help protect that from crashes. What we've been talking about all day, bear market crashes. Okay? Maybe there are some advisors out there that do this, but I can tell you, I've never heard of one. And we do this like nobody else. What I've just put in there is just a link for a page. It doesn't obligate you to anything. It's going to give you a bunch of information. And if you're interested in that, it's going to give you access to a free webinar. You can come, no obligation, see what it's all about, hear from Ben himself. If you don't have a plan for your long-term money, no matter what you're investing, okay, some of you have a lot and you ought to protect it. Some of you have a little and you ought to protect it, right? There's a truth on both sides of that fence. So you can come in and you can have us help you do just that, okay? Doing it the Tradeway method is a way to help keep that money safe. And again, no obligation here. You can open that up because, crashes, they just happen. This is not a fear tactic, okay? This is 100% true. Eventually, they go down. Now, we might see the market rocket up tomorrow. It could snap back tomorrow, go right back up into the range. Let's look at this. Right back up into the range and continue trading for another 6 months, 8 months, 12 months, whatever. I don't know. I'm not predicting that it's going to drop tomorrow, but I'm telling you there are going to be drops. And we can help you protect that money. And you've got goals for that money, and we want to help you reach them here at Tradeway. So is the market going to crash? Well, when? We don't know. But will it crash, right? Yes, eventually it will. So there's the answer today, giving you 4 important things to think on, some questions to ask, some skills to use to know, well, what am I going to do? What am I going to do? I can't know exactly when it's going to happen, but often I can tell when the season is changing, and when it is, what's my plan? If you don't have one and you need some help with that, that is why we are here. Click on the link there. We can help you answer those questions, and you can have a huge advantage on keeping your money safe. And this is true also, short-term trading and long-term, you can learn from us on both sides of that fence. That said, coming up on 45 minutes here, Market Monday. Is the market going to crash? I'm watching that low I mentioned earlier. That's what I'm watching tomorrow morning for consistent lows. I'm watching tech stocks because that's where a lot of the weakness is coming in right now. When Wall Street rotates out of tech, goes to things that are more conservative, we see tech drop. That usually pulls down the S&P pretty consistently. So far, we've seen tech stocks snap back pretty quickly. Maybe we're going to see that again. I don't know. If some of the underlying fundamentals and why they're rotating out of tech persists, could be in for a deeper drop there. We'll be in our community pages and interacting with our students daily to make sure that they understand what to do. If you're not in those yet, you can always go to tradeway.com. You can sign up right there for one of our classes. Our memberships are on there as well. If you have any questions, remember, you can reach out. Market Monday, just email support@tradeway.com. Market Monday, ask me any question you'd like. They will hand that on over to me. Please feel free to do that. We would love to get you into a place where you feel secure and hopeful about what is coming. This is not about fear, but about taking advantage of what is coming our way, one way or the other. That's what we do here at Tradeway. And that's the end for today, Market Monday. Very excited to be back with you this week from California. I'll be here again next week, Market Monday, same time. We're going to do this series on downturns, okay? We're going to continue this next week, and I will be back throughout the week as well on Thursday as we do our Stock Talk Thursday, and I look forward to seeing you guys then. We'll be signing off for now, back on Thursday. Let me know if you need anything, support@tradeway.com. Care of Market Monday. We'll get back to you, help you out. Thanks for being on tonight, folks. Appreciate every one of you. Thanks for commenting. It's a pleasure every single time